to advance tech innovation and entrepreneurship. We also have a network of alumni investors, angel investors who fund initially students, but now entrepreneurs in the Stanford community. And we also are very passionate about embracing diversity and inclusion, core values from our founders, both of whom are in the room today, Miriam Rivera, one of our speakers today, and Clint Corbett here. And they all are both amazing Stanford alum and both also founders of Illumen. I would like to start by thanking our SNE volunteers, fellows who helped do a lot of the work behind this event. So can you stand up? Emma, and some of them are not in the room, and thank you, and some from behind the scenes who helped, thank you so much. I also want to thank Professor Ken Singleton. Ken is there, and Bernadette Clavier from the GSB Center for Social Innovation for this room and for all their help.
A task of connecting two different things. So I'm going to do that by telling you a little bit about one of my favorite debates that we have within the GSB Impact Fund. So we have a fund here that is basically a device to engage our students in sourcing and investing in very early stage socially and environmentally impactful companies. And we have real money, small amount, but we do invest real money in early stage companies, roughly 3 a year. We've been doing this for about 4 years. The students are very excited about it. There's enormous interest on the parts of MBAs to be involved in impact investing. And we get about 100 students vying for about a third as many positions every year to serve on the Impact Fund. And during the year, one of the big issues we always talk about is what is impact? And we're going to get away from the double bottom line issue for today. I only have a couple of minutes. So what is impact? So the first way people think about impact is you look at a company and you ask yourself, is it providing some social or environmental impact out there? You look at the users of the app, of the services of the company, and are they being well served, and do we see impact? I think one can make a reasonable case that from the perspective of an impact fund, from this perspective of an investor, that that's not the way to think about impact, actually. And we argue this all the time with our students, and we're going to continue doing that, I think, year after year to keep them thinking.
Really briefly what we do. So the Center for Social Innovation here at the Business School educates insightful leaders for social and environmental change. And you've just heard from one of the programs that we are running and hosting at the center. But our students are interested in way more than impact investing. There are many other ways that you can have impact in the world with business skills today. And we have a number of them who are going to graduate as social entrepreneurs. Others are going to be agents of change from within in large corporations. Some are going to start and lead nonprofits, and you name it.
And what is Stanford SPARQ? We're the research unit of this partnership, and we call ourselves a do tank. We also like to think that we think, but we as well as do, but we're very interested in putting research into action. And what we're doing is partnering with industry leaders, and we're partnering with industry leaders in health, in education, in economic development, and in criminal justice. And we're focused on disparities, and we're focused on culture change. That's our that's where we're drilling down. That's our expertise. And what we when we started SPARQ 5 years ago, it was clear to us as researchers that more research is always needed. As a researcher, you know that. But one of the things that has become clear to us is we know a lot. We have a lot of research, and that research needs to be put into practice. So the goal of SPARQ is to partner with practitioners and to work with practitioners to understand what are the problems from their perspective on the ground, what answers do they need, what questions they need answered from the research, and then to try to work collaboratively to really answer that. And that's what we have done, begun to do in the investment space. That's what we're going to hear about tonight.
And then the other thing I wanted to briefly touch on is technology and bias. I'm from the world of tech, as are many of you here. We've seen how social media has led to a really bad xenophobia like the Rohingya crisis, a key factor has been social media and how we can amplify biases and what negative things can happen with that. On the other hand, there is a debate going on that is artificial intelligence going to be the kind of one that helps us tackle bias? Can we have these bots that can take away the bias? And particularly in the judicial and law enforcement areas, there's been some experiments where algorithms are augmenting human experts to take out the bias. But it's been mixed results because unconscious biases of the humans who create the algorithms are creeping in as well. So this is a complex problem to solve. And as the AI and machine learning become mainstream, how we train these models and the learning data sets we provide to the machine learning apparatus is going to be critical on whether we can mitigate or if we end up amplifying and actually rapidly spreading the biases of the human mind and making things even worse. So it's going to be pretty important for the AI methodology to work, for us to understand what is the nuanced nature of these hidden unconscious biases in our minds, and where again this research could be game-changing. And again, we are thrilled that we have some leading...
It touches every sector of our lives, and it also touches us in the investment industry. And so in the first study of its kind, SPARQ teamed up with Illumen Capital, with Darren's team here to examine the role of racial bias in investing. And so we know that asset allocators have a huge role here, right? They manage more than $69 trillion globally on behalf of universities and foundations and companies and governments and so forth. And as we know, they do this by distributing capital to fund managers to generate returns, yet only 1.3% of assets are managed by women and people of color. So this is a powerful elite industry that is virtually all white and male. And so why is that, is the question. Especially at a time when a lot of industries are becoming more diverse and they're focusing more on equity and inclusion. You know, how is it that the investment industry has remained nearly all white? And so many people in the industry itself view this as a pipeline problem. So the idea is that, you know, people of color, for example, they just don't have an interest in the industry, and even when they do, they don't have the education, they don't have the experience that they need to have really to be, you know, to be really competitive, or they lack financial capital. They lack connections, you know, the kinds of connections that are required to really break into the world of investing. And so there's some truth to this, right? That there could be, you know, a pipeline problem for lots of historical reasons, but added to that possibility is that bias is playing a role. And there have been decades of research demonstrating that racial bias and discrimination exist in low-wage labor markets. We have, you know, at least 25 years of research on this showing this, right? But there's been no systematic investigation of how racial bias in investment decision-making, how racial bias in that kind of industry could play a role where you have the financial stakes that are incredibly high. So Illumen Capital and SPARQ decided to partner on a study to examine whether racial bias is playing a role here. And so we presented asset allocators with one-page descriptions of highly qualified venture capital teams, and we had them evaluate those teams. And we used the photographs of the managing partners of the teams to depict the partner as either black or white. And we found that asset allocators evaluated the highly qualified black-led teams more negatively. So they evaluated them more negatively in terms of their track record, in terms of their expertise, in terms of their ability to execute on strategy. So all of these things, right? Even though they were identical in every way to the white-led teams. So there may be a pipeline problem in the investment industry, but it's not the only problem, right? Because we're finding evidence that highly qualified Black-led teams are suffering. And in fact, we found that the more qualified the Black-led team was, the more bias they faced. So
Jennifer talks about in the book that I think really epitomizes a lot of the work that we try to do at Impact Experience. And that's one of the tools that she talks about as part of the debiasing work is the power of individuation. So if you have friends that are, or if you meet people that are part of a different demographic to yourself, the power of what that can create in terms of breaking down barriers, breaking down the biases that you may have towards those other groups. It's a gross oversimplification of the complexity of that concept, but that's the very simple version of that. And that's really what our goal and our work at Impact Experience is all about. And what we do at Impact Experience is really build bridges between investors, entrepreneurs, innovators, and marginalized communities to co-create solutions together. And the whole purpose really is to create spaces for both people to be able to recognize their biases and to have an ability to be able to connect with people across differences that can then lead to ongoing collaborations and partnerships over time. And it's really amazing to be one of the communities that we've had the pleasure of working in over the years is in Puerto Rico, very much with the support from Miriam and Clint post the hurricanes there, and it's been very much on top of mind with all the hurricanes that are taking place with Dorian right now, but particularly post disasters, you see the aggrandizement of bias to a whole other level. And so the power of being able to have mechanisms to be able to engage people at those points in time to be able to think about how we can engage and work together. And one of the communities that we've been working in over the years is in southern West Virginia, a community that has been largely dependent upon the coal industry for many years. And much of our work there has been looking at often the biases that we may have towards people coming from the coal industry. I know my background was helping to build a coalition of foundations that were divesting from fossil fuels and investing in new economy solutions. And you know, the coal industry was the enemy, right? And you think about all of the preconceived notions that it's easy to have when we have certain values about things, but recognizing actually the humanity behind certain industries like that and the ability to actually build solutions based on recognizing that humanity as a starting point. And one final comment before I introduce our next speaker, Darren Dodson, is one of the areas that we've also been doing a lot of work in, and Brian Stevens, who is mentioned on the front page of Jennifer's book, and Jennifer also talks in the book about Montgomery, Alabama, and the Equal Justice Initiative Lynching Memorial and Museum that just opened last year there. And for, I know a number of you have been, but for those of you who haven't yet been, it's an incredible and challenging experience to go and visit. But we've been bringing groups there actually every few months as part of this broader work to be thinking about bias and thinking about structural racism and the grounding really in the history of our country and how that plays out to today. And I think the power of those types of experiences and the phrase that Brian Stevenson uses around proximity as we think about a lot of the questions that we're exploring today as being really important. So one of the pleasures that we have at Impact Experience, I have my wonderful co-founder, Darren Dodson, and part of our strategy, Darren leads an amazing impact-orientated fund of funds that he'll talk more about, Illumen Capital. But part of our strategy is to engage the fund managers and portfolio companies from within the Illumen Capital portfolio in the communities that we work in at Impact Experience. So whether that's in Southern West Virginia, engaging education technology companies to work within the school system there, or in Sonoma most recently.
Working to help New Orleans after Hurricane Katrina, which was an incredible experience. Jim Coulter was my partner in that work, so we worked together for the last 12 years and bringing more than 1,000 people and 300 from this community down to New Orleans to break through challenges. And across that journey, part of what we found is that people intending to help people, and this grew into a lot of the incredible work that I've had the pleasure to do with Jenna and Miriam and Clint and others, of course Radhika. It grew into this understanding that those that want to help people, often without checking their biases, can do a lot of harm. But if they do kind of examine and take a step back, as has been a lot of the learning process with Jennifer and her incredible work at the SPARQ Center, amazing things can happen. And this work is sort of humble work that started in Jennifer's house when she invited a number of impact investors over 3 years ago to sit in her living room and explore some of these core concepts and ideas of beginning to ask questions about our field that, if left unaddressed, would reinforce this abysmal 1.3% of women and people of color own and run funds within the asset management business. Just in a broad probability, kind of model, which we spent a lot of time on here at the business school. About $35 trillion is back of the envelope of what the pent-up opportunity of optimal allocation might be within this sector, after we continue to look at it and dig deeper into the problem. So with that, I'm excited to dive in more deeply. I'll do about 30 seconds on Illumen Capital. Jenna mentioned it. It's a private equity impact fund of funds focused on working in collaboration with SPARQ to apply evidence-based strategies to reduce implicit bias in the fund managers that we work with over a 10-year hold period. So we, every year that we're interacting with the fund, it's mandatory for our funds to go through it. It's mandatory that they go through an impact experience and build their proximity skills with communities that are different than them by race, gender, class, political persuasion, etc. And we've raised a significant amount of capital, made 4 investments into different funds, and are actively applying and deploying this methodology within the funds to increase impact and returns. Thanks very much, and I look forward to.
I'll talk about it within the context of venture capital because that's the space within asset management that I understand the best. In our area, the numbers are also pretty bleak, right? So about 2% of venture capital dollars are invested in women-led companies. And less than that would be invested in companies that are run by underrepresented minorities, more in the sense that immigrants and Asians may have more access to capital than underrepresented groups within our sector. I think that's reflective of the demography of the venture capital industry, which is still about 90% male, and that's actually plus. 90+%, and then probably on the order of 80-something% white. The facts of this pipeline problem, I think, are very mixed, because one of the things that you'll hear, including from some of the top tier firms, are statements like, we will not lower our standards to have women partners. And yet, when you actually look at the demography of the venture capital asset class, which the National Venture Capital Association did through a study that was run by Richard Kirby, who is a diverse manager in venture capital, what he learned was that the kinds of things that they were looking for in partners, they want to have somebody who's been an active CEO of a startup company. They wanted to have a woman that had a technical degree, those kinds of things. And then they kind of talk about what the pipeline is. But what they didn't talk about is the fact that of venture capitalists who are in business, over 70% of them don't have a technical degree. More than half of them have never been founders of any startup company. More than half of them have never worked as tech executives. So the bias is that somehow women have to be perfect examples of what's great in VC, but everyone else can be whatever they are. And so, I think that this is part of why it's not really a pipeline problem, because if we have the same criteria for women and people of color that we have for the white men who are already in the industry, then there would be way more people that are deemed to be qualified. So my sense is that there is, in fact, implicit bias in how we set criteria for selecting asset managers, and there is data to demonstrate that there are biases in terms of how we evaluate different kinds of entrepreneurs for access to capital. One of the great things that's happening now in this research is that there is more physical evidence of this bias. So, for example, there are many more demo days or pitch days that are now recorded and are available on video, and therefore are available to academics to study and to determine what kinds of questions are asked of which kinds of entrepreneurs. As they do this work, they see that the kinds of questions, for example, that women are asked are different from the kinds of questions that men are asked. One sector would focus on the risk of investment if you're looking at women, and then the upside or the potential high returns that are associated with male-led companies. And now I want to say that this is where I think Jennifer's research is really important. That bias is expressed by both male and female VCs. It is not a problem of white men only engaging in these kind of practices. And I think this is really informative for people, because then we can stop looking at it as an us versus them problem, because it's not an us versus them problem, it's a we problem. And to the extent that we can, I'd love this focus to be on how can we help in this area to increase access to capital throughout the food chain. I think Paula Pretlow has been on the LP side, meaning she's working with organizations that actually allocate assets to managers like Darren Dodson, and people like Darren Dodson allocate funds to funds like Hulu. So there is this whole food chain, and in every part of the food chain, we run into this issue of bias, and there are complicating factors just in terms of asset dollars and the size of particular funds. So, for example, funds like CalPERS that are multi-billion-dollar funds have stopped investing in venture capital altogether on the basis that it is too difficult to manage many small fund managers and accounts, and therefore they will move out of that sector. But what tends to happen is if those smaller and newer funds are not funded, you do end up with a pipeline problem, because more people who are women, more people who are minorities are typically in smaller funds earlier in their careers, and they build their careers and increase the size of those funds. So without large allocators being willing to entertain smaller funds, for example, you get the unintended consequence and the biased consequence of having fewer fund managers altogether that can be qualified to continue to invest larger and larger sums. So that is kind of my perspective, is that there's a lot that we can do at every part of the asset allocation supply chain, if you will, and that in our own business as asset managers, we have tried to implement processes that both help us to source more diverse entrepreneurs in our portfolio, and to not eliminate them in our decision-making process by using best practices on decision-making that have been developed here at Stanford University and have been applied in other sectors in industry, and we're just transferring it into the venture capital space where there really hasn't been a very systematic approach to decision-making. And we find that that is having the result that we are investing in a much more representative fashion in entrepreneurs than the industry as a whole. So, for example, depending on the month, because we make investments, every month, we may have about a quarter to about a third of our entrepreneurs who are women. about 40% of our investments have a woman on the team. Again, you know, we're looking at the industry having single digits and under 10% women in funds. We're seeing similar demographics, for example, in underrepresented minorities where you know, we have about 8 to 10% CEOs, and we may have something like in the 11s to the teens on underrepresented minority founders. And when we look at our whole portfolio, looking at teams, clearly because the tech sector is a largely white male sector, the majority, over 2/3 of our entrepreneurs are white men. But what we're seeing in teams that are attracted to firms like Ulu Ventures is that 80% of those teams have either a woman, a minority, an underrepresented minority, or an immigrant on their pool. We are also in the top decile of economic performance, and what we argue is that that is correlated to the fact that we have diverse teams. There is a lot of research that demonstrates that diverse teams actually outperform financially at the board levels at startup companies. Harvard University recently did a study on venture capital-backed companies in particular, and did see that this correlation that had been demonstrated in public companies and on boards also existed in venture-backed companies. So we're very excited to support this panel and the work that SPARQ and Illumen is doing, both as practitioners and co-conveners of this event. So thank you so much.
This is a methodology that comes out of the engineering school here at Stanford, and for the most part, over the last 30 or 40 years, has been applied in pharmaceutical R&D, trying to figure out which compounds to bring into clinical trials, oil and gas, trying to figure out where to poke holes in the ground, these kind of industries. So industries where you've got really big dollar decisions, you've got lots of uncertainty, and importantly, a lot of throughput in the process. So in other words, you can see the value of good process. When we started Ulu about 11 years ago, we brought this into Ulu, and I was kind of somewhat, well, not totally surprised, but somewhat surprised that literally nobody in venture was doing anything systematic around the decision-making piece. If you ask somebody, well, how do you make decisions in venture? And by the way, he's like, well, Miriam had a very nice exit at Google, we're going to invest, doing some angel investing. We're like, well, how do you do it? Because we want to be smart about it. Everybody said, well, you got to have the magic. And they start out with, oh, you want big markets, tenacious teams, that sort of thing. It's like, okay, great, I've got 5 of them here that all look like that. How do you pick? And I mean, literally, you got to have the magic. And then sometimes you get, well, you have pattern matching. And if you step back, I would argue that, well, venture capitalists could be the poster children for cognitive biases. And because you got stories like magic and pattern matching. Oh, by the way, there's no way to validate that. And there's no way to say that you're doing it wrong. And oh, by the way, you're doing it wrong if you make a lot of investments and you don't make any money. But it's 10 years before you figure that out. So when we started in venture, we said we're going to have a systematic process for evaluating risk and uncertainty. And the key things are, every entrepreneur is going to go through exactly the same process with exactly the same questions. And so it's like, just that alone, I would argue, is a big step in the direction for eliminating bias. And then the other big thing that we do is, we admit, like, I'm biased, Miriam's biased, we're all biased. And the implicit biases, the one you can't see, those are in some ways the most insidious. So now the question is, what can you do about it? Well, one really easy thing you can do about it is bring diverse perspectives into the conversation about decision making, and hopefully their biases will be different than your biases, and you come up with a better solution. And we actually involve the entrepreneurs in our decision making process in a very collaborative fashion to understand the risks and opportunities in the market. And then there are some areas, by the way, we think entrepreneurs frankly do a really lousy job. Oh, by the way, how much capital do you need to be successful? And how much dilution is going to happen along the way? So that's been like a, we've gotten no good information at all ever from entrepreneurs on that. So we just do it ourselves. So we've got our own benchmark data on that. But there's pieces of this pie where we say it's really important to have an in-depth conversation with the entrepreneurs. There's pieces of the pie where we say,
Please.
Thank you so much for this amazing panel. I'm like a very new student here at Stanford, also working on a social enterprise company, so I'm really excited about this topic. And something that's on my mind a lot is what Professor Eberhardt mentioned briefly, is like how are we weaving bias into algorithms and technologies, and how do we think about data sets critically? I've read a lot of, like I've glanced at your book, but read a lot about weaving those biases. And so my question for you, and I don't know if you have a good answer for that, but if you had to make one policy suggestion to a legislator that could be implemented tomorrow, what would that look like?
Would you mind sharing your name?
My name is Amelie Dabrowski.
And she's a policy student here at the Freeman School.
Amazing. We have one more question. Please, T.
What would you do with 10 times the budget or 10 times assets under management for all of your work?
So I'm gonna let somebody else handle that. But the issue of kind of AI and bias and all of that, the thing, well, there are a number of things, I guess, that worry me there. And, you know, one is that we feel like we can, you know, we can build these tools so that we don't have to worry about this issue anymore, that we can, you know, sort of get to a place where we can, you know, just, you know, not have to think about it. And I feel like that's a mistake. I feel like we've made that mistake in other ways in the past. We've made that mistake, I think, you know, even after, you know, the civil rights movement, where, you know, a lot did change. There were a lot of, you know, changes, especially, you know, in terms of laws and policies and so forth. And people thought that okay, there's going to be a whole new world here, and so we don't have to worry about this issue anymore. I think we also, you know, a lot of people felt like with the election of Barack Obama that we were in a post-racial society, and that we no longer had to think about, you know, this anymore, and so we've arrived. And I don't think, you know, we are, this is something that we're gonna always need to manage, we're gonna always need to think about. It's not, you know, something that we can, you know, to put it off on AI or whatever the new thing is that's gonna solve the problem. I think it's something that's with us and that has to be managed, and we have to be vigilant around constantly, because the bias does migrate. I mean, the bias we already see is migrating to new spaces. It's migrating online to, you know, to spaces that we didn't even have before. And a lot of that is because, you know, we're not dealing with it directly, and we're not, you know, we feel like, you know, there should be a magic bullet here, or we feel like we don't even need to talk about race, for example, because once we do, it can make things worse. But the not talking about it, you know, the being colorblind, and to actually add in the AI so that you can even blind yourself anymore, I mean, even more, I don't think is the answer. It's distancing us when what we need is, that Jenna was talking about, Brian Stevenson, is what we need is proximity. And so we don't need to feel like, you know, once we, you know, sort of remove the person from it, right? And we have the machine, we have the algorithm doing it, that people, and we still see the racial disparities that we see, that people are gonna be even more confident that bias is playing no role, and that there's nothing to be done. And you know, these disparities are kind of inevitable, and so that worries me too.
Should I just take a question on budget?
10 times. One is, I wanted to just acknowledge Teek, who's done incredible work here as a part of the university, building data sets and inspiring research around Latino entrepreneurs. And thanks for the question. I think, look, I mean, it's pretty basic to me that if people have under-allocated based on the, you know, a basic talent model of what we would expect to see as the complexion of talent internationally by $35 trillion, then the R&D budget to build the solutions to reduce or to enable the vision to see an opportunity would be a massive amount. I mean, 10 million or 50 million or 100 million would not be enough if people believe that the opportunity were that big. And part of what I sort of sometimes ask, I mean, this is one of the great anomalies of pretending to study bias, but alongside of people that do it every day, and sort of playing, in that role is trying to look at something by definition that people, if asked, they could not see. It's quite a strange thing, because what I learned in this class, or this school, was from a venture capital teacher. Many of you know Andy, who founded Benchmark, Rycliffe. He said the thing you look for all the time within venture capital is, one, being non-consensus. So you got an idea and you go around and you talk to people and you say, see, look at this idea. And they all go, I don't see what you're talking about, or else they would have done it already. And then you're right, is the second condition. So I think this is one of those rare areas where it's non-consensus, because when you walk around, people say, well, I think, maybe white guys should manage 98% of capital. And I pitch 500 people, so I have a sense of how people think after the last 2 years. And
what you were just saying, what would you kind of suggest for like a small fund that maybe didn't have any kind of diversity or inclusion initiatives in place? What would you suggest would be kind of first steps to designing that, like whether it's specific metrics that should be collected, or a pitch to fund managers about why it's important, just kind of navigating that space.
Would you mind sharing your name?
Christine.
Thank you. And we'll take a couple more.
Cool.
Yeah, please.
Well, I have a question. My name's Kevin Nichols. I'm curious. I grew up in the age of affirmative action, and it was very different going to school and otherwise with knowing that. And since that's been gone, I'm curious to get your take on what you think, if you think the tech industry would just settle itself on its own, and about your thoughts with the political climate now and the conversation about reparations. Your thoughts about that?
Maybe we'll do one more time. Clint, did you have your hand up?
Yeah, Clint, Barbara, I'm kind of curious if the panelists think there are structural reasons why bias in asset allocation is more entrenched or difficult to address than other industries. I mean, imagine if less than 2% of Stanford professors were women or minorities. Right? I mean, it's like hard to even imagine something that
It's not
extreme.
that far off.
For women and minorities.
No, I just tell you for minorities.
Yeah.
Well, for African Americans,
African
it's
Americans
2%.
and about close to 5 for Latinx.
Right, so if you add women and minorities Stanford professors in those two categories, because this is your 1%, your 1.3% number, right, Darren?
yeah, it's women and people of color.
Women, tenured women are 23%.
So it's more than an order of magnitude better than asset allocation.
Lots of good questions. Who wants to tackle which one first?
What is it in the, be curious what it would be in the business school.
Oh, it's much worse. Yeah, much worse.
I mean, as we get closer to asset management.
I think
it's
that's-
kind of interesting.
So you asked about what might help at kind of the manager level.
Yeah, well, just like first steps in like initiating, developing kind of like either an initiative within a fund, promoting diversity and inclusion, perhaps just in like the fund itself, like everyone there who's operating on the team, but then also what would kind of be the first steps in like, also what kind of analyzing your funnel, your referrer stream, like what kind of metrics would be kind of appropriate to kind of set up to at least kind of start to tell that story. And maybe just this is from the perspective of like pitching to like people who are managing the fund. Like how would you kind of convince them that these were important and like what steps they should take to be addressing these issues?
So you mean as a company pitching to the people?
A company or just like, I mean, I like work at a fund, so we're wanting to kind of start this up for ourselves in our space. Yeah. So that's what our question is.
The first stage of awareness is really important, some recognition. And then pairing that with research, sort of a back and forth between stories and narratives, and then research that the data shows how few people are involved, and getting people to think about that for themselves. I think that first stage of engaging people, developing a sort of sense of humility that you don't really understand this problem, but it's a big problem, coupled with what the world is like now. Diversity is a fact, and what we have to figure out is how to do this inclusion, and it's a big challenge, but everybody can have a part. I mean, it takes time, but I do think that I've seen what Jenna has done with the impact and experience, and what we've done, what Darren is doing, and Radhika. It's quite amazing. We're in a world where I think people want to do things differently. They're a little bit worried about being called out and being called a racist and that sort of thing. I mean, nobody wants that. So it has to be done. It has to be done well. But I think there are lots of people that will join us if we can figure out the right conditions. And I'm really inspired that you are thinking about how to do this. We have lots of answers, really.
I would also like to add a few things here. One of which is it's often very difficult to start from a non-diverse firm and end up with a diverse outcome.
Yes.
And I'll address that within legal, since that was my prior area of profession. When I was at Google, we built one of the most diverse legal teams in the United States. It was, when I left, it was somewhere like 150, 160 people. Some of those people have gone on to do amazing things and to take that early lesson in diverse teams and excellent teams elsewhere, including the U.S. Patent and Trademark Office. The first woman to ever run that team was my first patent attorney hire. The things I can tell you are that at Google Legal, the first three lawyers were an East Indian, myself, a Latina, and then the general counsel was an African American man. When people would call us from other companies, like, how the hell are you doing this? Like, LinkedIn would call and say, Google, what the heck are you doing? Why are you having such a diverse company? We can't find anybody. There's such a big pipeline problem in the law. Like, what is it? And one, I will say that when you think about diverse people, one thing you should realize is that they have different networks that include both the mainstream within their profession and subgroups within those professions, right? So if I'm a woman lawyer, I might also be associated with women bar events. I'm going to be associated with the American Corporate Counsel Association, the American Bar Association, like every other lawyer, right? But I'm also going to be involved with the Latino lawyers. I might be involved with minority lawyer bar associations and events. So, and that started like in high school, right? So I built networks up from high school that were in diverse communities because they served both my personal interests in terms of trying to navigate the environments that I participated in high school, in my profession. And so I had a motivation. Majority people have very little motivation to invest this much additional time and effort outside of their mainstream group because they don't see it as having rewards for them personally. So one is, I will say that it's just going to be much harder to do if you don't actually have diverse people on your team. So trying to create diversity on your team is actually critical. I've also encountered men within this profession, and white men in particular, who are undertaking self-education. So one gentleman at an advisory firm was going through a curriculum called Decentering Whiteness. And he himself was involved with other people who were proactively educating themselves. I have heard of a similar group which was called something like White Rich Men Learn About Diversity or something like that. So one is also people working within their own cultural and safer feeling groups where they can undertake some of these risky kinds of conversations and learning outside of the public view may really be helpful. And you know, I think those curriculum are often very much informed by people of color and women, but it may have a real value add to be doing it more privately and be able to screw up, right? So I think